Selling puts is like fishing. Let's take a look at my pool and see if there are any good spots to cast the line. Unity has corrected sharply over the past 10 days, from a high of $47 down to around $36. This is a game engine company. Many gamers would know it. The stock once traded above 200, but has fallen for years since then. I think AI could reshape the gaming industry. Game development may become much more accessible, just like how video creation used to require a TV studio, but now anyone can do it through social media. AI could expand Unity's user base, and management is already emphasizing that story. Unity has dropped about 4% today, so let's place an order. I monitor prices on this brokerage account, but I execute my option trades on IBKR. I'm selling the November 21 put, a slightly longer dated option that provides more premium. If assigned, I'd be buying the shares at a lower effective price. However, compared to companies with very solid cash flow, Unity's fundamentals are still a bit speculative, partly based on imagination, so the position size should be small and controlled. Okay, it just filled. Received $1,540 in premium. First trade of the day, back to the pool. The overall market seems to be still pulling back. It has rallied quite a lot recently, so even with today's correction, prices are still relatively high. This isn't the best weather for selling puts. Let's look at Bilibili, down 3.5% today. It's a Chinese video platform popular among young people. Its community feel is somewhat like Reddit. Last quarter, it just turned profitable. I've been following this company because, among many short video platforms in China, Bilibili is one of the few doing long-form content well, closest in form to YouTube. Of course, its monetization capability is nowhere near YouTube's yet. I previously sold quite a few puts on Bilibili, which have all expired, so I can sell a new batch. Since the stock has gone up recently and its option premium is relatively high, I'll choose a slightly lower strike price for reduced risk. Place the order. It hasn't filled yet, let's wait. Google is down just over 1 point. A few months ago, I was quite bullish on Google. Low PE and strong earnings growth. This year, the stock has been under some pressure as ChatGPT has brought competition to search, raising concerns about Google's core business. That's understandable, but ad revenue is still growing strongly, and YouTube's growth is also impressive. On the AI front, Google has deep resources. Gemini is gradually improving. Who will ultimately dominate the AI space, or whether the big players share the market, remains to be seen, but Google is still highly competitive. Recently, the stock has been recovering. Compared to the market darlings like Nvidia or Tesla, Google's valuation looks much healthier, though not necessarily undervalued. Still, it's suitable for selling some puts. Part of this is my own FOMO. I want to have some exposure to AI. Since I already have 2 put positions on Google, I'll choose a lower strike price this time. Both the Bilibili and Google puts haven't filled. Let's slightly adjust the price. Okay, Bilibili just filled. Google still pending. Back to the pool. Nike, down 2 points today. Nike's performance over the past couple of years hasn't been great. The stock had a brief uptick after earnings but fell back again in the past 2 days. At this price, it's not particularly attractive. Valuation isn't compelling, and the trade tensions add uncertainty. Still, as a consumer brand giant, it's solid enough. I don't currently own Nike shares, so I'll sell a small put position. If assigned, it can serve as a modest allocation in the portfolio. Place the order, waiting alongside Google. Fishing is the art of patience after all. 10 minutes later, done. Both Nike and Google puts are filled. LEN is down about 2.7 points today, and the price has been consolidating recently. This is one of Buffett's new holdings this year. With a PE around 12 and consistent dividends, it has a certain margin of safety. I already have some shares, so I can only sell a small amount of puts. I don't want to take on too much exposure. Since most of today's trades were November 21st expirations, I'll diversify a bit and sell a November 7 put, about 1 month away, place the order, and filled. All done for the day. No big catches today. Unity, Google, LEN were already in my portfolio. Bilibili's price is a bit high. Nike's fundamentals are somewhat uncertain. So even though I collected all these premiums, that doesn't mean the profit is locked in. Maybe some of these could turn into poison pills later. Still, that's okay. Like fishing, some days you land a big one, some days you go home empty-handed. Most days are somewhere in between. What we can do is look for reasonable valuations, diversify risk, and after that, just cast the line and wait for expiration day.